important point to note. Make sure that you guys do in fact have your silent electronic calculator for your POA Paper 1 examinations. Right, so let's begin. Alright, so question 1. Which of the following types of businesses is formed by two or more persons who are liable for the debts of a business? Alright guys, well you guys realize that this is in fact a business organization question, and a business organization where you have two or more persons will in fact be a partnership. So let's put that down as our answer, partnership. Question 2. In the statement of financial position, expenses owing are listed as, well, we all know this one as well. Answer should be B, current liabilities. Statement of financial position, also referred to as your balance sheet, amounts owing, current liabilities. Question 3. Mirage inadvertently bought 2 cases of expired mushrooms from B&B supermarket. He returned the items. In Mirage's books, this transaction will be recorded as a journal entry for, well, Mirage is actually purchasing items and he's returning it to the supermarket. So from his perspective, this will be D, purchase returns. Nice. Now moving on to question 4. In which of the following ledgers are the most nominal accounts found? Now nominal accounts, as you guys know, will include your expenses and your revenue accounts. And those accounts would normally appear in your general ledger. Question 5. To which of the following categories of cooperatives does a credit union belong? Well, a credit union is an example of a financial cooperative. Great job, guys. Moving on to question 6. Which of the following actions should a company take if it is likely to incur bad debts? Well, if a company is likely to incur bad debts, as you guys know, a bad debt is when a customer or debtors may not pay us in the future. Well, in a case like this, we will have to provide for such losses by creating a provision for doubtful debts account. Nice. Question 7. Which of the following list contains asset accounts only? Right, so assets are things that the business owns. Assets will include C, guys, cash, inventory, furniture, and motor vehicles. They are made up of fixed and current assets. C. Question 8. Which of the following formula represents the correct accounting equation for calculating the value of assets? And guys, we all know this one. Assets will include your capital plus your liabilities, or D, liabilities plus capital. There we go. Number 9. Which of the following features is associated with private limited companies? As you guys know, private limited companies are those companies whose shares are not sold publicly. So number 9, the answer is A. Alright, so we're quickly going to move on to number 10. Which of the following items is a capital expenditure? Now, capital expenditure, as we all know, is money being spent to purchase your non-current or your fixed assets. So the best option here for question 10 should be D, purchase of machinery. Question 11. Which of the following assets will be considered most permanent? Well, most permanent should in fact be A, premises. The purpose of an electronic clock card is to record. Well, clock card will be used in your payroll department, guys. So you use a clock card to actually measure employees' attendance. Answer is B. Moving on to question 13. Partnerships are formed for the purpose of what? Now you will have a list of answers here to go through. Number 1, 2, and 3. And you would have to choose the best option possible. So partnerships are formed for the purpose of, let's check them out. Combining capital from different persons? Definitely yes. Benefiting from different skills and specializations? Of course. Sharing ideas, experiences, and responsibilities? Definitely. So guess the answer should be D, 1, 2, and 3. Moving on to question 14. Control accounts are kept in order to assist management in, well, when we look at the topic of control systems, we would have seen bank reconciliation, sales ledger control, purchase ledger control accounts, even errors, all those fell under the control systems, and those different systems would be used to mostly locate errors. So question 14 answers A. Moving on to question 15. To which of the following accounts will depreciation of office machines be transferred? Well, depreciation will be treated like an expense, and expenses are recorded in your profit and loss account, which is C. Moving on to question 16. A company declares dividends of 15%. What is the value of the dividend warrant to be sent to the shareholder who owns 1,500 $1 ordinary shares? Right, so this question is basically asking what amount of dividend will a shareholder receive if they own 1,500 $1 ordinary shares. Alright guys, let's work on the calculations. If a shareholder owns 1,500 $1 shares, it means that his investment would be $1,500. He's expecting to get back 15% of this. So 15% of the 1,500. Now this is where a calculator comes in now. So you guys make sure grab a calculator. Let's work it out. 225, answer is B. Alright guys, nicely done. Right, time for us to move on to number 17. Okay guys, you realize that we have some calculation questions coming up. So we actually went through number 1 to number 15 without calculations. Question 16 and 17 would have calculations. Now in question 17, when you are faced with a situation like this with a very long paragraph to read through and then the question below, good practice is to read the question below and then go to the paragraph so you'll know exactly what you're looking out for. So let's check it out. What was the overall amount Mr. Arthur paid for inventory? Alright, so we know that we're looking to see how much Mr. Arthur paid for the inventory that he bought. Let's go to the paragraph, let's check it out. On March 1st, Mr. Arthur purchased $600 worth of inventory for resale. He received a 3% trade discount. Very important note. The invoice also stated 2% 20 days, net 30 days. Mr. Arthur settled the amount on the 15th of March 2025. And guys, let's see what it says. Now you all know a trade discount is normally given for bulk purchases, and that trade discount is not recorded anywhere in your books. So basically the amount on the invoice that Mr. Arthur would have received would be $600 less 3% discount. So let's work it out. So if his original total was 600 and he's getting a 3% discount, that means he's getting 600 by 3% is $18. Alright guys. So the amount that he will have on his actual invoice will be $582. And then he will be entitled to a 2% cash discount if he pays within 20 days. That's what this means, guys. If he pays within 20 days, he'll get a 32% cash discount. This net 30 days simply means he will have 30 days to pay off the invoice total. Let's see if he did in fact pay within 30 days. Mr. Arthur settled the amount on 15th of March 2025. So yes guys, if he bought it on the 1st of March, invoice date was the 1st of March, he paid it on the 15th, that meant he fell well within the 20 days. So he did receive that additional 2% cash discount. So let's see what that 2% cash discount would have been. Good, so you also there 11.64. So let's check it out. Therefore, the final amount that he would have had to pay would have been 582 minus 11.64, and his total would have been $570.36. There we go, guys. Nicely done. We got through there. Great. Time for us to move on to question 18. Mr. Abel and Mrs. Blue purchased his venture in credit from Mr. Keen. Now, by the way, again, as I did mention, let's look at the bottom part to see what the question asks us for, and then go back to the paragraph. Which the following figures represent the total in Mr. Kane's sales account? So Mr. Abel and Mrs. Blue purchased inventory and credit from Mr. Kane. Inventory is valued at $50 and $75 respectively, but the customer paid cash with inventory amount of $550. Mr. Kane also took inventory at cost for himself amount to $500. So we're looking to see what was the total in Mr. Kane's sales account. Okay, well, Mr. Abel and Mrs. Blue purchased goods on credit from Mr. Kane's. These are your credit sales, 50 plus 75. Another customer came and paid cash. This is $550 cash. This is cash sales. So good. So all we need to do is to add up your credit sales together with your cash sales, and we should get your answer. Alright, guys, and I'm getting $675, which is option letter C. Alright, time for us to move on to number 19, guys. What is the closing balance of the bank account? Let's check this. Item 19 refers to the following information. Bank account, T account. We have the debit side, credit side. So opening balance was $20,000. Added sales as well. Credit side, purchases, and well, you're missing figure for your balance carried out. Right, it's a simple one way. Simply have to balance off your T account. So guys, let's balance off this T account and let's get our answer and move on. Right, so the debit side would be $22,000 as you guys are seeing here. Good. Credit side will be 15, but remember it has to balance back to 22,000. So 22,000 minus 15 would be D, $7,000, and that should be our answer there. Right, because 15 plus 7 is gonna give us 22. Right, question 20. Rent expense owing at the end of the period must be debited to your profit and loss as an expense and shown in your balance sheet as a liability. What accounting concept does this represent? Well, the accounting concept will be the accruals concept, guys. Accruals or matching concept. There we go. Right, question 21. Item 21 refers to the following balances at the end of a financial period. What is the total value of assets? Alright guys, this is not a difficult question. You guys know what are assets. Let's look for our assets here. Assets. Motor vehicle? Yes, that's an asset. Accounts payable? No, that is not an asset. Account receivable? Yes, current asset. Capital? No. Buildings? Yes. So these are our assets right here, guys. 2,000 plus 2,000 plus 10,000. That should give us C as 14,000. Moving on to question 22. Which the following arrangements show the current assets in order of liquidity? Liquidity, as you guys remember, is simply the ability to convert your current assets into cash very quickly. And the most liquid asset, as we all know, will be cash in hand. So your answer is either A, B, or C. Well, actually, the answer is either A or B if you look at it, because cash in hand is A or B. Right, guys? But let's follow through. Let's see. Let's look at A. Cash in hand, cash at bank, account receivable. Well, guys, definitely the answer will be A, because the next best option after cash in hand will be cash at bank. Again, this is the order of liquidity. Great. All right, moving on to question 23. Let's check it out. Question 23. When a proprietor withdraws cash or other assets from business, what effect does this have on the business drawings or capital account? Alright, let's look at the suggested answer. The capital account is increased? Definitely not. capital account is decreased, well, that is correct. B should be our answer. 23 answers B. Let's look at the remaining answers just to make sure. The drawings account is decreased? Nope. Neither drawings nor capital is affected. Well, both are affected. So yes, guys, the proper answer will be for question 23. Looks good. Moving on to question 24. Porter bought inventory for $500 on credit. In which book of prime entry will this be recorded? Now, when you purchase goods on credit, this will be recorded in your purchase journal. Question 25. In an effort to raise capital, a company ordered 205% debentures at at $100 each for the subscription. 5% is an indication that the company will do what? Okay, so you're trying to sell debentures, and the company offered 205% debentures, and they're asking us what does this 5% mean? Well, this 5% basically means that the interest that will have to be paid will be 5%. Alright, so let's see what's the best answer there, guys. And I'm looking at the answers A, B, C, or D, and the answer that says that 5% will have to be paid as interest to the debenture holders will obviously be C. There we go. Now, question 26. The working capital of Young and Sons is 15.5 and the value of current assets is 16.5. What is the total current liabilities? Okay, well, this is a simple equation for us to work up the working capital. Now, working capital, as you all would know, would be your current assets minus current liabilities. That will be our working capital, guys. So remember that. Current assets minus current liabilities to give us working capital. So you put those two together, we should get our answer. Let's check it out and see. So the working capital is 15.5, value of current assets is 16.5. Okay, so 16.5 is the current assets minus current liabilities, which is the missing figure, to give us the working capital, which is 15.5. No, we don't even need to go grab a calculator for that one, guys. Obviously, we are seeing that the difference should be 1,000 Got through there. Alright, time for us to move on to question 27. Let's check out question 27. When a net loss is incurred, how does it impact on the capital of a sole proprietorship? Right, guys, so a loss has been incurred. How will it affect the capital of a sole trader? Well, when a loss has been incurred, it will decrease the owner's capital or owner's equity. So B is correct. All right, moving on to question 28. Again, we're going to look at the requirement. What is the inventory at the end of January? So now we have some data to work with, and they're asking us what is the inventory at the end of January. Now, this is basically asking us what is our closing stock, right? So inventory at the end is our closing stock. Alright guys, so from this data here, we had to work out our closing stock. Alright, let's see how we're going to work out that. Now, we have opening stock of 15.5. We have purchases of 1,200, and we have cost of goods sold being 14. Alright guys, let's check this out. So, if we have a look at it from right here, 15 is our opening stock, purchases 12. So basically, if you put those two together, we would have had $2,700 worth of goods available to sell. We only sold 14, as you guys are seeing. So if we had $2,700 worth of goods to sell, and the cost of goods sold was only 14, well, the amount that we did not sell will be 2,700 minus 14 to give us 1,300, guys. And that was it right here. Simple like that, right? So 2,700 minus the 1,400, and that would have given us 1,300 here. Great. So amount of goods available for sale, cost of goods sold is what we did sell, closing stock is what we did not sell. So the difference between 2,700 and 1,400 should be 1,300. There we go. Right, time for us to move on to question 29. Now, question 29 and question 30 looks a bit long, but we will be able to get through that very, very comfortably. Now, reading down the requirement, the gross profit on the first and first out is, okay guys, it's a simple question really, which is asking us about gross profit. Let's go to the details. Item 29 and 30 refers to the following information for the records of LT Limited. Sales 45,000, purchases 10, and we have closing stock values. Now you all would remember when we had done stock valuation, you'd have these three methods of working out stock. First and first out, last and first out, and average cost. And these different methods will give us different closing stock values. But as you all know, closing stock values affects reported profits. So there now we are being asked what is our profit in the first and first out method. Now to work out profits, or gross profit, that will simply be revenue minus cost, right? Let's check this out. Now our revenue is 45,000, purchases was 10, and the closing stock on the first and first out was 5. Alright guys, so that's how simple this is. If we purchase goods worth 10,000, we had that to sell 10,000. What we did not sell was 5,000 as the closing stock. So therefore the cost of goods sold would have been 10 minus 5 to give us $5,000. And we simply subtract that from sales. Our answer should have been 40,000. So D would have been our answer. If you guys still not too sure, let's see if we can put on some workings right here for you guys, right? So sales, 45,000, bring it across here. Right, purchases, 10,000, less the closing stock. And in this case, first and first out valuation 5,000. So it would have meant that the cost of sales would have been 5,000 here. Good. Therefore, gross profit would have been 40,000. And that was it there. Simple like that, guys. Check it out. Alright, not too bad, guys. Hoping you guys are pretty comfortable with getting that answer. Good. Now let's move on to question 30. Question 30 asks the same thing. Was it gross profit but under the AFCO method, guys? The AFCO method. So we can actually use back our workings and let's see. So I'm going to leave sales up there. I'm going to leave my purchases, but now my closing stock will now change from 5,000 to 3,000. Now I can type it in here. Good. So if our purchases was 10 and closing stock was 3, then our cost of goods sold will now be, well, you guys know it, 7,000. Great. So what will our gross profit be, guys? Gross profit will now be 45,000 minus 7,000, which is going to work up to be 38,000. Great. Right, nicely done. Got through that as well. Answer should be C. Alright guys, looking pretty good so far. So we are halfway through the paper. Nicely done. Now we're going to move on to number 31. Item 31 refers to the following information provided by a business. What is the balance per bank statement? So this is a question asking us about bank reconciliation statements. Now you guys would know your format for your bank reconciliation statement, and you guys would know that your balance per cash book will be a starting figure to work with, the 560, and you would normally add your unpresented checks and subtract your lodgements. Alright guys, let's work on that on our calculator. Balances per bank statement, add your unpresented checks, minus the lodgement, answer should be 530. Question 31 should be D. Great. Alright, question 32. Rose contributed 7,000 in cash and a motor vehicle with 3,000 to our partnership. Rose's contribution to the partnership will be recorded in journal as. Now, if Rose contributed 7 in cash and 3,000 in a motor vehicle, the total capital will be $10,000. So guys, we're looking for capital of $10,000. So far, I'm only seeing A and C as our options because capital obviously is credited 10,000. But now the cash and the motor vehicle are both assets, and the best option for us here will be C, guys. Check it out. Cash being debited 7,000, motor vehicle being debited 3,000, and the capital being credited 10,000. So good job there so far as well. Answer for 32 is C. And moving on to question 33. In preparing its final accounts, a business omitted to include return inwards, so they forgot to include return inwards. Which of the following items was affected by this omission? Well, return inwards will be when customers return goods to us, as you all know. When customers return goods to us, it will reduce our sales. So sales will definitely be affected, number one. Good. But you'll notice these suggested answers doesn't just have one only. There's options 1 and 2, 1 and 3, 1, 2, and 3. So let's move on and check it out. Now, as we did say, when customers return goods to us, it will affect our sales. Now, that will not affect our purchases. So definitely 2 will not be an idea for us to be a part of the answer. So here what, guys? Look how simple this is for CXC. We are saying that number 2, net purchases, will not be a suggested answer for us. A has 2, so that is out. I'm just showing you guys how simple it is to work through. C has 2, therefore that's out as well. D has 2, that's out also. So the only obvious answer should be B, 1 and 3 only. Check it out, guys, right? But if you actually go through it and you're going to look at what number 3 is your gross profit or loss. Yeah, definitely, guys. Because your sales is being reduced because of return inwards, that will affect your gross profit as well. So nicely done. 1 and 3 would have been your answer there. All right, moving on to question 34. Now in question 34, drawings of cash for 620 was entered in the cash book but not in the drawings account. The journal entry to correct this will be. Right, guys, this seems as though it's a situation where we have single entry because we did enter the drawings in the cash book. So you would have credited your cash book with drawings. Good. But we forgot to debit the drawings account, guys. We forgot to debit the drawings account. So to fix this, we must debit the drawings accounts, yes. And because this is the idea where single entry happens, whenever you have single entry, the suspense account will arise. The best answer here would be A, debit the drawings, credit suspense. Question 35. A businessman offered a reduction in prices for prompt payment for inventory purchase. Under which column in the history column cash book will this reduction be entered? The businessman is offering persons, his customers, a reduction in the price. Well, if he gives his customers a reduction in price, well, that obviously should be discount allowed from his perspective. Good job. Alright, guys, a good job so far. Looking pretty good. Time for us to move on to question 36. When comparing the books of a limited company with the books of a sole trader, which the following items on your statement of financial position will differ mostly in presentation? Now, when you guys would have done your statement of financial position, as well as your, for companies and sole traders, you would have seen that the major difference is with your capital section, guys. Sole traders simply has opening capital, add net profit, less drawings to give it closing capital. But companies will have ordinary share capital, preference share capital, reserves, debentures, and so on. Alright, guys, so D, question 36 is the best response there. Now, question 37. An article is subject to a 20% trade discount. The list price is 600. What is the sales price? Right? So we already discussed trade discount in an earlier question, and trade discount is a reduction in the price given because of bulk buying and so on. And if the list price is 600 and you're getting 20% off, 600 by 20% means you're getting $120 off. Therefore, what you would have to pay would be 480. Good job. That is the sales price. Now here's another way to work this thing out, right? Instead of you saying 600 by 20%, getting a figure and then subtract it by 600, all you can simply say to work this out very, very quickly is 600 multiplied by 80%, guys. Because remember, 20% is the discount you're getting. And that's a quick way to work out this as well, huh? Right? There's no mathematics and anything else. But it's a quick, nice way to work it out. Alright, moving on to question 38. Total on the credit side of the trial balance will be. Okay, so this question asks us about a trial balance. Let's check it out. Item 38 refers to the following account balances taken from the ledger of a sole trader: equipment, rent prepaid, sales, discount allowed, debentures. Now we would have to know what values or what accounts will be a debit balance or what accounts will be a credit balance. So let's check that. Equipment is an asset. Assets normally has debit balances. Rent prepaid is an asset, normally has debit balances as well. Sales is income, normally credit balance. Great. Discount allowed is an expense, normally debit balance. And debentures is like a loan, treat like a loan, treat like a loan where members of the general public purchase debentures from companies, right? Debentures, long-term liability, falls under the finance section part of the balance sheet as well. Credit balance. So guys, let's check it out. Total the credit side should be sales and debentures, T9,000. Great. Alright, moving on to question 39. Let's go check it out. Mrs. Green is a dry goods merchant, which the following transaction will result in a debit to her cash account. Well, cash account is an asset. Debit means your asset account is going up. So if she has a debit to her cash account, it means her cash account is going up. So therefore, she would have been receiving money. So which one here in question 39 is giving us an indication on Mrs. Green is receiving money? Well, A, she sold inventory for cash. Great job. Right, item 40 refers to the following table. What should the value of closing stock be? Okay guys, we have items, we have cost price per unit. We need to work out the value of closing stock from this situation. Alright guys, how are we going to work this out? Well, all we simply do here is to take our number of items, multiply by the cost price per item, and simply add them up. So let's get this done. Alright guys, let's do this. $100 by 6. 80 by 100. 50 by 84. Let's make sure and get the right answer. $4,200 it was, yep. And finally 6,300 at the end as well. Alright guys, let's just add up all those values. Let's see what we're gonna get. $24,500. Answer should be D, 24,500. Alright guys, good to go so far. Not too bad. Alright, time for us to move on to question 41. A vehicle costing $80,000 is expected to depreciate at a rate of 10% per year. Using a straight line method, what will be the total depreciation on the vehicle after 3 years? Right, now straight line method is simply where we have a constant sum of money, being used as our depreciation. They said 10% per year. Good. So 80,000 by 10% per year, that means our depreciation will be $8,000 constant. And remember, we're looking at what will be the value of the vehicle after 3 years. Okay, so let's check it out. Let's do some workings for that. So what we are saying is that depreciation is a constant amount, in terms of straight line method, constant amount of depreciation every year. They're giving us a figure of say 10%. So our yearly depreciation will be 8,000. We are looking to depreciate this asset for 3 years. So our total depreciation for 3 years will be 8,000 by 3, which is 24,000. Right, and that should be our answer right here. Because they ask us what would be the total depreciation on the vehicle after 3 years, answer should be C, 24,000. Guys, nicely done. Alright, time for us to move on to question 42. Ishani's cafeteria does not keep a complete set of accounting records. The bookkeeper provides the following information. What is the balance in sales ledger control account? Now you have to remember, the sales ledger control account is basically a summary of all your customers' accounts in your sales ledger. So you need to know what is the balance on your sales ledger account. Now, you guys remember that your sales ledger account is an asset account, and debit to increase and credit to decrease. So good. So what will go on the debit side? What will go on the credit side of your debtors ledger account? Let's check it out. Right, so just run a little T account right to the side. Sales ledger or debtors ledger. I'm going to put the word debtors. Now let's go. So first of all, we are seeing cash sales. Now hear what, guys. If we are looking at cash sales, that meant we'd have sold goods on a cash basis to customers, and this will not fall under debtors, guys. That is out of the equation. And you guys got that, right? We're looking at sales ledger control account. Sales ledger is a summary of all of our credit customers or our debtors. If we sold goods for cash, that will not form part of our debtors. So that's out. Opening receivables, yes, that'll be on your debit side, 700 here. Credit sales, yes, we are selling goods to customers on credit. That's going to come here, debit side. Remember, debit is to increase the amount that they owe us. Credit will be to reduce the amount that they owe us. Good. Cash received from accounts receivables, okay, yes, they actually paid us some money, so that's going to be on the credit side. So now that we have these values, we should now be able to work out what the balance should be. This is simply the balance of your account. So on the debit side, you're going to have 1,700. The credit side is going to be 1,250. So all you need to do now is to balance it off. Let's see. What are we going to get as our balancing figure? 1,700 minus 1,250 Answer should be B, 450, guys. There we go. And I must say, this would have been a tricky question, but once you guys follow our steps, you should be fine. All right, should be pretty good. The trick was that cash sales here, guys. So fall for that trick, right? Nice. The balance of the figure would have been here, 450. There we go. Now we have balance back to here, 1700. Great. All right, time to move on to question 43. What is the correct total for the sales account? Okay, no problem. Sales account, let's have a look. Cash sales, credit sales. Well, guys, remember, cash and credit sales are both sales. So 10 and 45 going to give us 55,000. So C as your answer. Easy question. Right, time for us to move on to number 44. Karen and Garth, partners in a business, they share profits and losses in a ratio 2-1. What will be their respective shares if the business makes a net profit of 3,600? Now, guys, this is more a mathematics ratio question, but I mean, it is partnerships where sharing profits and losses in the ratios. Karen and Garth. Let's see. Well, 2-1. Now, 2-1 still means Karen will be getting 2/3 and Garth will be getting 1/3. Great. Let's see what their respective share of profit is going to be. Karen is 2/3 by 36. And Garth will be 1/3 by 36. Right, so straight away, you're going to realize that Karen should be getting 2,400 and Garth will be getting 1,200. Right, so you see that right there, guys. So easy answer. Nice. Time for us to move on to number 45. In the books of a partnership, the salaries of the partners should be. Now you had to actually read these suggested answers to know what we should do. So again, in the books of a partnership, salary should be A, debited in drawings account, definitely not. B, credited in the appropriation account, let's think about that. C, debited in the partner's capital, or D, credited in the partner's current account. Right, guys, the best answer there would have been D, credited in the partner's current account. Because you guys remember, the current account represents the amount of interest the partners have in the business over the period. The credit side looks at what the business will be owing the partner, and the business will be owing the partner salaries, so therefore this will be on the credit side of the current account. So D is the best answer there. Great. Right, moving on to question 46. Amalgamated Components was a private company until they had admitted additional shareholders by selling shares in the stock exchange. They can now be described as, well, since they sold goods in the stock exchange and they admitted members of the general public, they will be a public limited company now. Which the following list of activities shows the correct order of the stages in the accounting cycle before final accounts? Easy question for you guys. Answer B. Journals, ledgers, then trial balance thereafter. Good. Question 48 coming up now. Under which of the following conditions will a trial balance still balance? So remember, trial balance shows debit balances and credit balances coming forward from your ledger accounts. So if your debit balances is the same as your credit balances, of course the trial balance will balance. So if you left out an entire transaction as number one, you would have left out a debit, you would have left out a credit, so therefore figures will still be the same. It would still balance. So good, so that is one option. Both debit and credit were overstated by the same amount. So even though it was a mistake, we had the wrong figure, it was by the same amount, therefore the debit side will still be equal to the credit side. Both the debit and credit entry were understated by the same amount. Again, since it was an error, but the error was the same on both sides, it will still balance because the debit balance will be equal to the credit balance even though the figures were wrong. So guys, all of them will actually cause the trial balance to still balance because all of the situations, even though they were wrong, debit side will be still equal to the credit side. Good job, guys. Alright, time for us to move on to question 49. How will the purchase of equipment on credit affect a firm's statement of financial position? Well, if you're purchasing equipment, your assets will increase. If you're buying this on credit, your liability will increase as well. So answer for question 49 is definitely A. Moving on to question 50. What is the total provision for bad debts? Right, guys, so we have some details here to work with. In 1 year, the accounts receivable figure is 8,000. Bad debt supposed to be 1% of that. Over 2 years, 4,000 is the AR. Provision should be 2. And over 3 years, 6,000. Provision should be 3. Alright, guys, so let's see if we're going to get the answer for that. All you simply have to do, when they ask us for the total provision, you have to take each year, multiply it by your percentage to see what was the amount that happened each year, and then simply add them up together. So let's do that. Alright, so let's put them together and let's make sure we're going to get our values. So 180 here. Here. And 80 again. Add up those values together. $340. Alright, guys, great job so far. Let's see if we can move on and finish off this paper. Alright, so now we're going to question 51. Now, question 51 to 53, we are seeing a full balance sheet. Hey guys, you're seeing a balance sheet which would normally be recorded in a T account style, as you guys are seeing. But nonetheless, we'll be able to answer this up. What is the total of our fixed assets or non-current assets, guys? Non-current, as you know, fixed assets. Let's check them out. We have premises, we have fixtures and fittings. So, yep, 14.5. Good job. Answer C. Nicely done. And moving on to question 52. What is our closing capital? Well, closing capital, as you guys know, would be your opening capital less loss in this case minus your drawings in this case, and let's say this 20,000 will in fact be your closing capital. So guys, 20,000 closing capital, answer should be A. Great. How about question 53, working capital? Now you guys know this one because we came across this formula early on. Now working capital will be a current assets subtract your current liabilities. So let's see. Current assets would be 8,800, which is made up of all these items here. Good. Current assets. And current liabilities will be this 3,300, which is made up of these values. Great job, guys. Let's put them together. Current asset minus current liability, 8,800 minus 3,300. Well, answer should be 55. Good. So current assets minus current liabilities to give us working capital. Nicely done. I'm moving on to question 54. An accounts receivable is unable to pay a debt of 450. Now in this case, they're using the word accounts receivable, but it simply means a debtor. A debtor, somebody is owing us money, cannot pay, right? Unable to pay 450. However, an agreement was made that he would pay 30 cents on every dollar he owed. How will this payment be recorded? So he had a debt of 450, but he cannot pay the 450. What he can pay is 450 multiplied by 30 cents. Right, guys, so how much money are we collecting from him? . 135. Great. So we're collecting $135. Now, if he's giving us that money, our cash account will be going up. So we debiting our cash with 135. And the only option I'm seeing there for debit cash of 135 is B. Great. Nicely done. And of course, the corresponding entry will be to reduce the account receivable to debtors account by 135 there. So nice. Right, time to move on to question 55. Item 55 refers to the following information. A calculation determining gross profit percentage as follows. 185,530 divided by 529,800 by 100%. Guys, this question comes up a lot. I've seen it so much times. Well, this is your gross profit percentage, which is normally gross profit divided by sales. So answer for question 55 is E. Moving on to question 56. How much money should Max receive as a share of residual profits? So straight away we know that this is a partnership situation. Now, when we look at the question and the data given, they told us that Jane and Max are in partnerships, sharing profits in a ratio 3-2. No worries with that. They gave us net profit, interest on capital, salary, drawings, insurance drawings. How much money should Max receive as share his profits? Now, what you guys would have had to do here in this situation is an appropriation account. Yeah, guys, an appropriation account for a partnership. I'm sure you guys remember how that went down. All right, let's check it out. Now, in an appropriation account, in order for you all to arrive at the figure that will be used to share the profit, you will have to take the net profit of the business, which is $23,005, and add back on any amounts that will be increasing this profit. So guys, you remember what would normally be added back to this net profit figure? Well, I'm sure you guys remember. Now, what will normally be added back to this net profit figure would have been the interest on drawings, guys. So make a note of that, huh? 2005, those are all workings here. We're gonna add the interest on drawings, which is 150 plus 140. That'll be what? 290. Right? If you guys want to actually show it separate to make sure, yeah, add back the interest on drawings. Great. Nice. And then what next, guys? What next? Well, is there anything else that the business has to add back onto their profit after they add these two? Well, let's see. What about the actual drawings itself? Well, remember, guys, this actual drawings does not appear in the appropriation account. The actual drawings will normally show up in the current account. So this is not part of our calculations whatsoever. Right? When we're doing the appropriation account. So net profit, add back interest on drawings. The actual drawings normally shows up in the current account. Now we're seeing interest on capital and salaries. Now the interest on capital and salary is what the partnership business has to pay to the partners. So these amounts will now be subtracted, guys. So we'll subtract all of these. Alright, so you're going to subtract the interest on capital, which is 3,000, and the salary, which is 2,005, and we're going to get the balance of profit that will have to be shared. Alright guys, let's do that. Let me just put the total here of the interest on drawings, right? So make it a short working. So 23,005. The interest on drawings, which was 290. Right? Now you subtract the interest on capital, which is 2,000. Actually 3,000 here. is subtract the salary, which is 2,500, and that will give you the balance of profit that has to be shared amongst the partners. So let's work it out. Let's see what it's gonna be. Add back the interest on drawings minus the interest on capital, which is amount to 3,000 total, and then subtract the salary as well. All right, so remember interest on capital and salary must be subtracted, right? So good. So 18,290 is what you're gonna get. And we are saying that max, how much is he getting? Well, ratio 3 to 2. Max is the second partner there, so he's getting 2/5. So 1890 multiplied by 2 divided by 5, 73/16. That is Max's portion of the capital of the profit. Alright guys, so good job there as well. Looking really good. Alright, time for us to move on to number 57 and 58 and finally 59. So not bad guys, right? So 57 and 58 are payroll questions. Let's check it out. Hands and Feet Company present the following, well, a summary of payroll records for employee, gross wage, national insurance, income tax deductions, salesman commission, credit deductions. What's the value of the statutory deduction? Now, a statutory deduction is simply compulsory deductions which the employer must take out from the employee's gross pay before the employee gets the net pay. And this is by law, by the government. The government actually says that the employer has to take out this by law. And well, these statutory deductions that we do in fact know about will be income tax deductions for sure, as well as your national insurance or your social security deductions, guys. So these two right here. Right? So 1,500 plus $250, that should give us 1,750 as our answer. Good job. Alright, question 15.8. What is the total value of the employee's net wages? Alright, guys. Well, you guys know this one. It'll be a gross wages plus any additional income, so 10,000, plus salesman commission because that's an income, so 10,000 plus 300, right? So we're gonna work that. That's his total income there. And now remember, we want to find out what is gross payroll base. Now you subtract all the deductions, guys, which is the national insurance, income tax, as well as the credit union. So I'm just adding them up all together and putting them in brackets because remember, we'll just subtract the gross from the deductions to give us net. Alright, let's see what that's going to work up to be, guys, right? That's 10,300 here. Subtract. $4,200. Am I getting some good calculations here? Let's see. Oh, I messed out something in the calculation. Let's see. Alright, so there's 1,750 plus 2,500, which is 4,250, right? So 4,250. And that will give us the net wage, which would have been $6,050. Great job. Alright guys, awesome stuff. Looks really well. Alright, so you're on the home stretch, guys. Let's close this off. So question 59 shows us an appropriation account and asks what conclusion can be drawn from the above appropriation account. Well, the appropriation counts for a company. It basically shows how much money the company earns on the credit side and what amounts they have put aside already. So if you look at it very carefully, they have 26,000 in net profit and retained earnings from before as 894.50. And then they actually put aside some funds here. How much have they put aside, guys? Let's see. Right? I mean, we could actually look at the income and see that they're making close to 27,000, right? We've seen that. But how much money are they actually putting aside? 10,000 plus 250 plus 4,000 plus 1,200 plus 6,000. They actually put aside 21,450 and they're making close to 27,000. Now, this means that they are in a profitable business. Good. So one, they ain't profitable, so that's good. Two is out, not doing too well, that's definitely out because they are profitable. But since they already put aside 21,000 and they're making close to 27,000, add these two together, it means that they do have extra money lying around, which they can pay out to ordinary shareholders. So three is a good option there, guys. The answer should be C, one and three. My last one here, guys. The current allowance for doubtful debts is 500. A business account receivable at the end of the financial year is 1,000, and the allowance is now 4%. What entry will reflect the change? This is a provision for doubtful debts. Question. So provision right now is 500. The provision has to be 4% of 10,000, which is actually 400. So that means that the provision is actually reducing from 500 to 4. Now, this means that, you know, the provision is reducing by $100. Now, when a provision is reducing, you normally debit that, guys, right? So debit the provision with the amount is being reduced by. So the proper answer here, the only answer that has 100 in it anyway, is in fact D. You debit the allowance for doubtful debts by 100, you credit your income statement 100. Credit your income statement means that we actually are receiving $100 from some customer who previously we thought we could not have gotten the money from. So we are totally good there. All right, guys, so this brings us to the end of your June 2025 paper.